and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Joining us this Monday morning is Ambareesh Baliga, who is an independent markets commentator. Also with me in the studio is Karthik Malhotra. Karthik, good morning.
Morning, Shweta.
Bright Monday morning.
Oh, Monday blues, but thankfully the Monday greens for the markets. Nothing to complain about this morning. A very marginally green open for the markets. I think all the headlines that were supposed to come last week are out. We've seen what happened with OCCRP report on Adani, later with Vedanta. We've seen big announcements coming from Reliance Jio. We've seen macroeconomic data coming. So I think everything that the market was expecting and anticipating
is out and about.
Is out and about. So the only big headline event this week is the G20 meet.
Okay.
Now, are the markets going to read anything into it? Is there going to be something substantial that comes out of the G20 meet in Delhi NCR that is going to impact markets? We don't know yet. I think Ambareesh might be able to tell us. But this morning we've seen a nice green open for the markets. Not much. Sensex, Nifty both up about 0.2% in early trade. We've also seen the rally in the mid-cap stocks sustain over time. So we've seen the NSE mid-cap 100 up about 0.5% this morning. And overall, I think it's been a good green start.
A good green start. Ambareesh, good morning. Thanks very much for joining us. How do you explain the green start? I think, as my colleague rightly pointed, all numbers that were supposed to be out are out. What is market anticipating this morning?
No, I think, these numbers have been decently good. I mean, if you look at the GST data, that also has been extremely good. And I think people are clearly looking at the G20 meet where, I think the main topic out there would be sustainability. But more important, I think it will show India as an undisputed leader because all the eyes will be on India and this meet. So I think sentimentally that would be quite positive for us. And overall, I mean, as long as the markets don't really break that 19,200 levels, I think the bulls would still be in command because the number of times we have, gone close to those levels and bounced back decently well. I think in the last couple of weeks, I think it's about 3 or 4 times we have gone to those levels and bounced back. So that's also decently positive.
Hi Ambareesh, good morning. Thanks for being with us here on a Monday morning. Not too many news triggers this morning as we are seeing, but some specific stock action that I wanted to discuss with you. Number one, news coming in on Tata Steel, a £500 million investment likely to go through in the UK. Stocks trading this morning in the green. How does the Tata Steel picture look like to you?
At least in the short to medium term, it looks quite good because this news is there as far as Tata Steel is concerned. But then overall, the steel basket, we are seeing some sort of bounce back in the prices. So because of which, I think we could see the steel as well as metals overall performing decently well, at least in the short to medium term.
Okay, and what is this trend that you're seeing with the, with first the EV plant foray of Tata into the UK, and now you're talking about investments in the steel sector? Overall, the group's ambitions of not just, fostering growth in India, but actually becoming a driver of growth for international markets, including the UK, creating employment, creating jobs and raking in investment, setting up factories. Is there a trend here that we should see when it comes to the Tata Group as a whole?
I think, that clearly shows their confidence as far as the overseas plans are concerned, because I think that was a clear issue for them in the last decade or more. But now the sort of confidence which they are showing, I think that's quite positive for the group overall.
Okay. And talk to us about ITC. ITC also 1,500 crore rupees to be invested. Shweta, interesting news again this morning. That we saw in the wires, in fact, not much in the papers. We saw that 1,500 crore rupees for for ITC to set up its packaged food division factories in 2 more cities. So ITC stock still in the red. What could be the reason for that, Ambareesh?
We are seeing this investment in a new plant after a long time from ITC. Till date, they've been only giving back cash to the shareholders in terms of, high dividend. And that's one of the reasons why I've seen a very good dividend yield for ITC as such. But then I would look at this as a positive because investment in a new plant clearly means that you'll see the revenues still moving up further as far as ITC's FMCG and retail business is concerned. So, I would look at it positively, and any sort of a correction in ITC should be utilized to buy.
Okay, and also news coming this morning about Zerodha. In fact, Nikhil Kamath on record stating that Zerodha is going to invest 150 crore rupees in Nazara Tech. Now, Amrish, the online gaming business, as we've seen, has been fraught with very, very unique challenges where there was a tax confusion leading to tax clarity and apparently not a GST change, but just GST clarification. We are seeing 150 crore rupees being invested by Zerodha, India's largest stock brokerage, into an e-gaming company like Nazara Tech. Is there value still to be derived from online gaming in India? We've seen the number of gamers. We've seen the fact that, gaming as overall revenue collection has even surpassed OTT subscription collection. But despite these changes, is there value to be seen in gaming stocks?
No, I mean, clearly, see, this is the business of the future because most of the younger generation, I mean, if you're looking at people up to the age of 35, 40, are, I mean, clearly looking at gaming as the next big thing. And I mean, that clearly shows from the subscription figures which are there. But I think the issue is more on the regulatory angle as to what new surprises could come from the government as far as the regulatory side is concerned. I think that's the only concern. Otherwise, I don't think one should be bothered about the growth as far as this sector is concerned. And clearly, this investment from Zerodha, I mean, clearly shows the confidence in this space.
But with revenues also adding up, Amrish, there is going to likely be pressure on profitability, especially profit after tax when you account for GST changes, etc. So, do you see profitability despite revenue growth in online gaming by account of more users coming in? Do you see profitability to be a concern for gaming companies?
No, that would be a concern, no doubt. I mean, that's the reason I said I really don't know as to what sort of further regulatory action could be there as far as this space is concerned, because this could be the cash cow for the government. Going ahead. I mean, earlier we have seen that the cash cows were cigarettes and liquor, and I think this could be the new cash cow as far as the government treasury is concerned. So I would be surely a bit bothered. About this part of it. Although when you're talking of revenues and the sort of a growth, I think there's no question about it. But when it comes to profitability, there could be a bit of a bother.
All right. Another story that's going to be in focus is that of Kotak Mahindra. The Kotak Mahindra Bank chairman, Uday Kotak, seemed to have resigned. He says there is a succession plan now in order. He seems to be following, I think, a trajectory for all old guard, which is now being replaced by a new guard, as some would like to say. And that stock, of course, up this morning. Amrish, what's your view on the Kotak Mahindra Bank and its future prospect under new leadership?
I was a bit surprised when I saw the stock moving up today, despite Uday Kotak stepping down nearly 4 months in advance. He was supposed to step down by 31st December. And clearly, I mean, as of now, I don't see a very clear succession plan as such. I mean, although internally, I mean, they have 2 internal candidates for the post. But then when you look at RBI, they've clearly been mentioning that it should be an outside candidate. So we really don't know as to what is going to work out because, unless there's a very, a clearance from RBI, you don't know as to who the successor would be. At the same time, if it's going to be internal candidate, we should remember that most of these people have been there with the bank for the last 2 to 3 decades, which is quite positive, no doubt. But then most of them are close to the retirement age. I think that should be the other bother because, again, when you look at a leader taking up, you at least expect the leader to be there minimum of 5 to 10 years, which may not be the case. Which may not be the case as far as the candidates we are talking about.
Amrish, talk to us about the disruptions you see in the BFSI space, and I'm talking about banking as well as non-banking, both combined here. We've seen the merger of HDFC and HDFC Bank. We've seen a change of guard now at Kotak Mahindra Bank. We are looking at a new entrant in the NBFC space called Jio Finance. How do you see the whole BFSI space panning out in India?
I think there'll be much more disruption in the NBFC space as compared to the banking space because in the banking space, we have already seen a decent amount of consolidation. So I don't see much of a change as far as the banking space is concerned. But when you talk of the NBFC space, I think there'll be a major disruption, especially from Jio, the new kid on the block. Basically because the group has deep pockets and I think the most important other thing is the data and the reach which the Reliance Group has both via the telecom as well as the retail. So I think, I mean, they would come up with, I mean, products which can disrupt the markets, and exactly what we have seen Bajaj Finance doing in the last about a decade. I think we'll see happening from Jio Finance much faster. Maybe in the next 4 5 years, you could see them as a major disruptor. And I think, I mean, the main sufferer here could be Bajaj Finance, which has been enjoying that huge premium because of what they did in the last 10 years. But then I think that's one stock to be looked for as to how that reacts. But as far as Jio Finance is concerned, I would be quite positive.
Okay. And days after news of, and in fact on 1st of September, and we covered that story, Jio Finance is no more a part of Sensex, but it's still a part of Nifty. Will that exclusion happen very soon? What's happening at Jio Finance?
I'm not sure if it is going to continue to be part of Nifty as well after the demerger. I think Amrish might be able to tell us better. But Amrish, as I'm seeing it, you mentioned Bajaj Finance being a pure NBFC player. But here we are talking about JioFin, which is going to be an NBFC, which is going to be an AMC, which is going to be an insurance provider. So, I think the whole basket of offerings is much larger in the case of JioFin. And of course, news coming in this morning also suggesting that now the circuit levels have been revised. So until JioFin was in the trade-to-trade segment, it had the 5% circuit, now which we saw it breach almost every single day of trade last week. But now the circuit has been revised to 20%. So should we still expect volatility? And then, of course, I mean, how do you classify, a stock or a company like JioFin right now, given the diverse interests it has?
Yeah, I mean, like I said, I mean, this will be a disruptor, and I took the name of Bajaj Finance because of the market cap which it has, and the premium which it has over the rest of the players in the BFSI space. So, I mean, that could be the one which could get affected the most, and I mean, that's why I took that name. I mean, if you're talking of, Jio Finance again possibly coming back into the indices, I think that's a given thing. Possibly over the next 6 to 9 months, I think we should see that coming back, because you really can't ignore a stock which is at about 1.5 lakh crores of market cap, and surely it will move up more from here. Because out of the Nifty, nearly about 15 stocks are below 1 lakh crores. So, I mean, a stock like this cannot be ignored as far as the indices are concerned.
And is it likely to keep its position in Nifty 50, as Shweta just asked, or should we see perhaps some revision there as well? Is it not going to be part of the top 50, top 30, because it's already not part of the Sensex? But that's not purely with valuation, as I understand. That is also a function of arriving at other data, which could take some time, including revenues that the company is likely to shore up. So which index do you see JioFin really being placed in?
No, see, I mean, Nifty sooner or later, I think it should be out. But then if you're talking about a slightly longer term, I think it should be back in both the indices, because you cannot, I mean, afford to ignore a company as large as this. So once the data starts coming in, and once it gets into F&O, then possibly you'll have it coming back into the indices.
Just to clarify, Amrish, is it still a part of Nifty index?
I think so. I'm not too sure, but if it is still a part of Nifty index, it may not be there for too long, because I mean, this was done as a transition. When it was demerged, it had to be there in the indices because Reliance Industries was there in the indices. But then first they said 3 days, and then it was extended. So I think it should be out sooner than later.
Okay, Amrish, stay with us. There's a very interesting, data point that we've been able to dig out, and this, of course, has come no surprise from the August sales numbers of Maruti Suzuki. And I think, that's going to be, of course, a very interesting story for India to continue watching. But if we can pull out those graphics, I think some very, very telling signs of A, what India is driving, and B, what is driving India, both, if I can put it that way. So very interesting data coming in, especially from the month of August. And we've seen almost a 15% rise year on year in sales between August last year and August this year. Of course, you must have seen this data, but I want to go a little more granular into this data. And try
before you do that, that 14% is also on the back of the fact that 2022 was a COVID year, perhaps.
2022, we had seen recovery from COVID. I think we were badly hit in 2020 and 2021. But yeah, the economy has started opening up, and that is when you really saw people wanting to have mobility of their own and not be restricted to public transport
Exactly.
and
So this is the
infrastructure.
year people are buying more cars, taking to more cars.
2022 would have already seen the buying action.
Right,
and
but
now
people
we are
still
in
working from home.
2023. And people still, yeah, sure.
Yes.
But let's look at the other data which is coming from the Maruti stack, and that is really interesting because we'll see what kind of cars are being driven and what kind of cars are being actually shunned. So now out of that 1.89 lakh that we spoke about, the domestic sales for Maruti are about 1.64 lakh cars, right, every month. So now what does this actually tell us? This tells us on an average every day the company is selling 5,300 cars. I've broken it down further. Every hour, and I'm assuming a 24-hour window, right? Showrooms are not going to be open 24 hours, but every hour Maruti Suzuki is selling 221 cars. Break it down further, 3.68 cars every minute. And the usual suspects are actually not there anymore when it comes to growth drivers. Look at the mini segment, the Alto and Espresso, the sub 5 lakh rupee cars. The decline has been about 45% from about 22,000 units a month last year in August last year to only about 12,000 units this year. Okay. Now let's look at the other data which is coming.
So that's literally half.
That's literally half, right? So 45% decline there, almost half. Now the mid-sized sort of compact segment, as we call it, the Baleno, Celerio, Desire, Ignis, Swift, Wagoner, these were cars that were meant to be driving in India. They continue to be driving. So about 72,000 units last year, 72,000 this year. Even the van segment, which is the Eco, the one and only van, is flat at about 12,000 units. So no change there. Ciaz, the only sedan that Maruti has in its stable, which competes with the likes of, the Volkswagen breeds and the Honda City, etc. Ciaz is down about 44%. It's almost halved from 1,500 units a month last year to about 850 units only this year. And no surprises, what is actually driving in India and what is driving India and what is India driving,
I think we're about to come to what
here we are, utility vehicles, both SUVs as well as MUVs, up from about, 58,000 odd units from about 27,000 units last year. That's more than double, 118% jump. No surprise, Maruti stock this morning has again been in the green. So, Ambareesh, I mean, this is not the kind of data one would have expected from a country like India, let's say 5 years ago. So, today we are at a point that it is not the small-sized cars. In fact, the mid-sized and mid-sized being the average, but even the utility vehicles, the expensive cars, which are driving growth for India. So, how do you see this auto story pan out, Ambareesh?
Affordability clearly has improved for the better in India, and the aspirations are decently high. And because of which we see that entry level, there are not too many people interested. It's more of the SUVs and the MUVs where the sales are happening now. And I think this will continue because if you look at the order book position of Maruti, it's about 4 lakh vehicles of orders which are still pending. Which they'll have to do it possibly over the next 3 or 4 months. But then we have seen this, sort of order book for the last 1.5, 2 years post-COVID. So I think this will continue, no doubt.
Okay. Do you see Maruti still not being in the EV space despite big announcements already made that 2025 is going to be the year when Maruti gets into electric mobility? Do you see the stock being, more or less range bound until 2025, or will you see some buying action in anticipation of electric vehicles also, as we get closer to 2025?
No, I think it was a very thought-through decision as far as Maruti is concerned that they will launch in the year 2025. And I suppose, in the run-up to 2025, we should see the Maruti stock doing still better because whatever they have done till date, they've done it in a very big manner. So I think it will be a big bang sort of a launch when it happens in 2025. And that's when I suppose the other players will really have to wait and watch out for.
I think I included, many experts would say it's a little too late, perhaps, Karthik. You're joining the EV bandwagon when there are companies that have already announced massive plans. They're already stacking up. The inventories are up. Their plans are as grand as, having 50%, for example, in case of Tata.EV, having a 50% EV fleet by somewhere in late 2030s. Big plans there from different competitors. Do you think Maruti is a bit too late, perhaps, in joining the bandwagon?
So, Shweta, as I see it, Maruti does not believe in knee-jerk reactions. Okay. And having observed the company over time, it's very sure-footed. It enters a market or enters a segment or enters a particular price range, knowing very well that it has the capability to deliver. Okay. We've seen Maruti also being a laggard, so to speak, in the SUV space. As the SUV space was hotting up, you had players like Mahindra and Tata coming out model after model with new cars. But look at, ever since Maruti launched the Grand Vitara less than about 8 months ago and or just about, 10 months ago or so. And now look at the Jimny and look at the whole range of Invicto, etc. in the MPV space, SUV and MPV space. Maruti is seeing users come back to the Nexa showrooms and buy those high value purchases from the Maruti showroom. Okay. So I think Maruti likes to take it slow, be a little sure-footed, not venture into something which may or may not take off, and make grand investment plans only when it is very sure about where it wants to go and when it is completely convinced that yes, this is the direction that the market is going to take for the long term, and that is when it goes and makes those announcements and investments. So I think, yeah, to look at it right now, Maruti doesn't have an EV, but Maruti does have a hybrid, and it is perhaps it's going to be opportune 2025 when we'll see the entire e-mobility infrastructure also take off and be available, where owning an EV is not going to be a pain, but is actually going to be easy enough. And that is when Maruti is going to make its entry. That's how I see it.
And being a market leader means you already have some sort of value addition that you can make. You can quickly turn it around, and you already have a captured market that perhaps is going to come back to you.
Absolutely.
For more. Maruti's story, and Maruti's story is also a story of, as our colleague Rakesh Kar often points out, it's a story of India's growth. It's a story of India's future. And R.C. Bhargava also pointing to a very unique perspective there. I think it's important for our viewers to also keep in mind that electric vehicles may not be the only way to move forward, because to have electric vehicles in place, you've got to have charging capacity, you've got to have cells and batteries, and all of that in turn is not sustainable in the long run.
So I believe it will have to be a hybrid, so to speak, a hybrid of hybrid vehicles, electric vehicles, hydrogen driven vehicles. So clean energy, clean fuel is something that we will have to, adopt sooner than later. But I think sticking to the auto sector, Amrish, it's also important to look at data that has come in from Mahindra and Mahindra, which again has largely been a diesel based, SUV maker. And we've seen again almost a 16% odd rise in sales for the month of August year on year for Mahindra. But the stock this morning trading in the red, what could be the reasons for that?
It's quite difficult to say as to why it's trading the red today, possibly because of the sort of numbers which have come from Maruti. But then, if you're talking of the next year and a half, 2 years, I think M&M should continue doing extremely well because even in the EV space, they are making their mark. And as far as their new models are concerned, M&M has been getting extremely good sort of response. So I don't see any issue as far as the stock is concerned.
And other macroeconomic inputs that are coming, of course, oil prices, Amrish, are going to be, something that we will have to continue to watch for. We've seen last week, crude jump on the WTI index to about $87 per barrel. Even yesterday, we saw, the oil data coming between $84 to $85 per barrel. And now we are looking at the month of October, when there could be another voluntary cut from the OPEC Plus bloc, which is likely to cut down about, about $1 million per barrel or so. So, how do you see this oil story pan out? India's estimates suggest that at about $90 a barrel, we should find a decent equilibrium that will sustain growth as well as consumption. But any chances of the $90 a barrel getting breached with OPEC cutting down on oil, especially given the fact that even Russian oil is not as cheap as it used to be when we bought it at $30 a barrel or so. So how do you see this entire oil story panning out in India?
Absolutely. I mean, I think that benefit which you're getting from Russian oil, that's already quite down, and because of which we have reduced our imports. I think the last 2 months, the imports from Russia has been lower month on month, and I think that will continue. And at the same time, if you look at the oil prices, yeah, I mean, up to $90-$95, I don't think there'll be too much of an issue as far as the Indian economy is concerned. I think the issues will be beyond that in case we go beyond $95, which I just hope it doesn't. But looking at the sort of data and the news flows which are coming, there is a possibility. And I think that issue will be bigger for the government because we are getting into the election season. And there was an expectation some time back that we could see a cut in the retail prices of diesel and petrol. But in case we see 90, 95 plus, I really don't know as to how the government would be able to do that. I mean, just like the way they cut the prices for LPG by 200 rupees. So it is expected. I mean, it was expected that there would be this populist measure by cutting the excise duty. So that's something which would need to be closely watched out for.
And since we're talking about import of oil to India, Russia's import, which was at about 42% in the month of July, has come down to 34% in the month of August. So there is obviously a decline of import of oil from Russia to India. What would you attribute that to? Is there a slower consumption? Because when you look at auto data, there's a different story playing out there. There are more sales, there are more, automobiles out there in the market. What exactly is hurting oil consumption in India, if at all? Or are we now looking at alternative to Russia at this point in time?
No, we are clearly looking at an alternative to Russia because the price benefit or the price advantage which we had in the whole of last year, I mean, that was slowly going off. And in fact, we've had the minister also quoting that we have found alternate supplies which are better than or advantageous to us as compared to Russia, and because of which we have seen that the Russian imports have steadily come down in the last 2 months.
Okay, let's look at the oil PSU stocks this morning. If we can pull up that data, Amrish, what would be your sort of call on oil PSUs, ONGC, GAIL, Bharat Petroleum, Indian Oil, etc. Are these good stocks to hold right now, given the fact that crude prices could actually go up and consumption in India is not likely to ebb? So, what should be an investor's call on oil PSUs right now?
I think on stocks like ONGC and Oil India, I think one should be bullish because the oil prices are going up, and like we discussed, it's very much possible that we could see oil prices between 1995 or slightly higher than that. But when it comes to OMCs, I mean, I would be a bit cautious at this point of time because, like I said, because of the general elections quite soon. I mean, there can be a cut in your petrol and diesel prices, and I don't think the government will completely absorb that cut via excise. There could be some sort of pressure on the OMCs. I mean, who have been enjoying high margins in the last couple of months. So I think one should be a bit careful of the OMCs at this point of time.
All right, one should be careful. That, of course, is the word coming in from Ambareesh Baliga at this point in time. So thanks very much for taking time out. Thank you for joining with all your inputs. And we look forward to having you back once again with us. But staying on with some of the biggest stories coming out of India, India, of course, is waiting and anticipating and going to host all G20 nations, their prime ministers, their president, their head of state, and all of that is going to happen on 7th, 8th, 9th and 10th of September here in the national capital. A lot is on the agenda, a lot will be discussed, but importantly on the economic agenda, what could be the biggest points that India would be in fact putting in front of these G20 countries? What would India be hoping to bargain for? And the other way around, what could other countries be hoping India will bargain for, India should be pushed back on? What's on the economic agenda?
So, a lot, Shweta. I think number one, it is, of course, a great global headline event.
Yes.
Right. And we are playing host to the 20 largest, most powerful economies of the world. Right. Now, this comes at a time when India, of course, is in the run-up to election season. And there is no doubt that India will want to stamp its presence as a large economic power which cannot be ignored when it comes to any decision making in the geopolitical economic hemisphere. Right. Now, we'll come to what India should push for and what India may perhaps be pushed to the wall for. But I think right now the environment in Delhi NCR is also quite interesting. In fact, I had driven down to Agra and back over the weekend, and it's not just Delhi NCR. Even a city like Agra has got these lovely statues running across the metro line of various yoga asanas, of the various yoga poses, all nicely wrapped up, covered up, I think waiting to be unveiled just ahead of the G20 summit. And we are likely to expect a lot of dignitaries traveling to Agra to see the Taj Mahal. But I think coming back to Delhi NCR, it almost reminds you of of inspections that used to happen in schools. That there is new Geru Chuna happening on roads, on flower pots, on trees. So in fact, in Noida, if you look at if you drive past Noida, you'll see it's not just that lovely tricolored lighting which has been there for almost a year or so now. I think it came around Diwali last year and has continued to be there. You've also seen trees being illuminated. So there are these lovely little lights, blue colored washes on trees, and in addition to that, you've also got painting happening on trees. So you've got nice artisanal work happening on the barks of trees. And there, as you can see, I think the visual suggesting this sort of run up to
last minute planning
and going and seeing what is really in store. How is the decoration and the decking up of NCR happening? How are the traffic situation likely to get managed? What is the upkeep when it comes to very prominent areas which are likely to be visited by G20 leaders? But I think if we come back to the core of what really defines or should define India's presidency and how India should go down in history when we talk about G20, I think it's important to look at number one, what should India push for? What is it that India definitely needs the world to understand and appreciate when it comes to G20? Number one, of course, Prime Minister Modi also said over the weekend that inflation is a global issue.
Absolutely.
Inflation is an issue which the whole world is grappling with today. So what is critical right now when it comes to inflation specifically is creation of alternate supply chains. So it's very important that the dependence on certain regions, certain blocks is no longer the case. You've got to have enough and more options for the global supply chain to kick in and tame inflation as and when a situation like that arises. We've seen how we got impacted during COVID zero lockdown when China's zero COVID implementation, the policy, and we'd seen how factories across China had shut down and how trade from and to China had reduced, and that led to the first impact of inflation in the West. And thereafter you saw the Russia-Ukraine war. So your wheat exports, your oil import, export, all of that took a massive beating because of the ongoing war between Russia and Ukraine. So number one on India's agenda to push the world towards has to be diversification of global supply chains. Add to that, and very closely linked, India has to steer away from this broad nomenclature of China plus one. I think that identity of plus one and plus one equal to India does not cut it today. We've seen how India has been able to get out of the shackles of COVID and how China has receded further down. So it's a clear contrast of progression versus recession or regression, right? So here we should not be seen in the same light as a regression driven China and India being, a preferred or a by default plus one. I think the entire narrative has to change to China plus one being replaced with India plus emerging markets. And when we talk about emerging markets, that is where this whole story of the Global South emerges. And Global South is something that Prime Minister Modi and other state heads, even at the BRICS summit, were really big upon, that there has to be this emergence of the Global South, led of course by India, but inclusion needs to translate beyond the immediate subcontinent of India, China, perhaps Bangladesh, and even beyond into perhaps pockets of the ASEAN region.
Right.
This includes, of course, and beyond ASEAN as well. So Vietnam, Philippines, Thailand, these are emerging blocks which are very likely to have their breakthrough sometime in this decade. So I think that China plus one has to be replaced by India plus emerging markets. Within these emerging markets, certain African nations and the southeastern nations need to be a clear-cut emerging market, new definition of the emerging market stack, where India is a front runner and supported by as and where you find the right resources, the right skills, the right expertise, supported by the global south. So global south becoming a very, very potent economic bloc is something that India needs to walk the talk on. And I think it can be impressed upon during this global meet, which is likely to happen on 8th, 9th and 10th of September.
And add to that the new frontiers, the new challenges that come by the way of cryptocurrency and AI, both of which are in a way untamed sort of resources that India and other developing economies and developed economies must utilize on, must bank on. But how do you do that without an actual real framework in place? So that of course is going to be another issue that India will be pushing.
Should be. I think, you know, emerging technologies, new technologies, India in any case has been at the forefront of any IT-led innovations. Now, whether you talk about the back-end services, which the likes of TCS, Infosys, Wipro, HCL, Tech have offered to the world, or when it comes to core product developments, new innovations in the startup space. So you talk about fintech, you talk about quick commerce, you talk about food delivery aggregation, you talk about, you know, having a very, very clear man-to-man marking when it comes to an Amazon being head-on with a Flipkart or an Uber being head-on with an Ola. So India has been at the forefront of either developing new technologies or quickly being able to better existing technologies and create a market of their own.
And a framework.
So when it comes to AI and crypto, which you mentioned, again, these are very, very new technologies out there in the world. And it is going to be imperative for AI to have some sort of a regulation. By regulation, I don't intend to say that that regulation has to cede enough control to the government to be able to shut off the taps as and when required. But basically, what gets generated with Gen AI, how do copyright issues get tackled, and how do you ensure that you don't land up in a situation where AI is taking autonomous calls without a real sane human mind being able to tame it or control it? So AI being one. Second, of course, cryptocurrencies. I think India has been very quick to shun cryptocurrencies, unlike the rest of the world. So the West has still been able to make a use case for cryptocurrencies. India has been able to create a disuse case for cryptocurrencies, right? So again, who regulates crypto? What are the use cases for crypto? Where should crypto be accepted? Is it a financial asset? Is it a monetary asset? All of those cases need to get sort of, you know, included in a global framework. And that global framework, by way of some sort of regulation or some sort of deeper creation of a framework for cryptocurrencies, is something that India should do.
Perhaps should be on agenda. We don't know if it is on agenda just as yet, but there are of course challenges on which India will be pushed, and a few of those challenges emerging recently, where we are looking at news reports that Trump, the US president, was going to visit
Former
India.
US president.
US president. But Biden,
yeah.
I beg your pardon, who's going to visit India, will of course be pushing India on relooking its import curbs on laptops, palm tops, camera phones, and all of that of course has been an agenda for a while, because we've had US spokespersons earlier as well coming on record talking about how that import ban hurts many US based companies in India, including Dell. But HP of course looking to now find local partners, but that of course could be on agenda.
Of course, Shweta. So I think there is going to be some pressure for India to withdraw or amend or add some flexibility to the various import and export curbs that India has implemented. Of course, the import curbs on laptops, tablets, PCs, cameras, etc. are likely to impact China more than it is likely to impact US. But then again, in US, the pressure that could come on India would be that when you create these alternate supply chains, and even if you want to block trade coming in from China, because you don't want the Chinese economy to grow at a clip faster than yours, and that is when you will assert your position at the global head table. I think what is important to note is that by way of these laptop import curbs, we are looking at more US-based companies setting up manufacturing plants in India. And the world will want to push that against India and say that no, let us continue to operate whichever geography we find more value in, and hence you need to be flexible on your import norms, right? But I think it is important for India in equal measure to also push for the fact that there is PLI, there are incentives which are going to help manufacturers take advantage of the various schemes available in India. And we've already seen 40 laptop makers globally sign up for the PLI scheme last week. So that is a list of 40. 40 companies have shown interest, but not all 40 of them will possibly start manufacturing immediately. But we have reason to believe that at least a good 25-30% of them will see some action when it comes to manufacturing. But US will want to, President Biden will want to push India to the wall and say that, hey, ease your laptop import curbs, because there are US based brands like HP, Dell, etc., which will directly get impacted with this ban.
And not just import curb, but also export curb. Export curb, especially on rice, because that's been a bone of contention for many countries which were hoping to export. India being the second largest exporter of rice in the world has impacted a lot of people who are hoping to get rice at a minimal, cheap rate perhaps. But those export curbs would also be perhaps renegotiated. Many countries would like to push for that.
Again, I think there would be pressure on India to relook at the rice export ban. India was a little flexible last week. We saw countries like Bhutan, Singapore, and UAE, if I'm not mistaken, where India opened up the supply lines when it came to export of rice. But there are accusations on India that India has now in fact led to food inflation in other parts of the world, including the UK. Right. So India being different estimates suggest between 40% to 60% of the rice basket of the world, and all the rice, that at least half the rice that the world eats actually goes from India, and India closing the tap on that is sure to have a direct price impact on those countries and their food baskets. So there is going to be pressure on India to open rice exports. But then again, like I often mention, it's important to take that analogy of when you're traveling in an aircraft. You've got to wear your oxygen mask first before assisting others. So you have got to keep your inflation in control, the welfare of your citizens first, before you open doors of exports to the rest of the world.
It's interesting you mentioned that, because a lot of Western media at this point in time is also accusing India, as you rightly said, of exporting food inflation to the rest of the world. Obviously, India has responded to that appropriately by the same analogy that we've got to protect our own interests first. We've got to tame our own food inflation first before we can help you. And rice export or curbs on rice exports are helping us do that. There could perhaps be a relook at it in the near future, but not happening anytime soon.
We live in an interconnected world, Shweta. Just as India is seemingly exporting food inflation, India is also importing inflation when the OPEC decides to increase oil prices.
That is correct.
Right? So that has a direct bearing on fuel prices. That has a direct bearing on supply chain. So I think in an interconnected world that we live in, every country, even OPEC, why is OPEC cutting oil production? OPEC is cutting oil production because it wants oil prices to stabilize at a higher price, right? So India is looking at exporting rice simply because India wants the price equilibrium between rice being sold and rice being bought in India to meet at a point which is lower on the price graph. Right. So overall, I think in an interconnected world, these challenges are going to be there. But I think what is also important for India to push for is definitely going to be the UPI story, is definitely going to be the India stack story, the digital public goods, public infrastructure goods, right? So I think that is one big story which India has been able to outshine the rest of the world. And it is important for India to show the G20 leaders how easy it is to scan and pay and move on in life. And the India stack, the whole architecture
Some of the visiting leaders are already in awe of how fast it is. I mean, we've seen pictures of that, we've seen videos of that. Some of the visiting leaders in the past couple of months are already in awe of how quickly you can buy things in India. You just have to scan and pay.
Exactly. And the entire architecture on which this rests, the India stack, I think that's again a massive story. And the timing, I think, for G20 is even more right now, not just with UPI India stack, but with Chandrayaan 3. The success, I mean, still early days perhaps, but I think very easy to still say that it has been more of a success than any other space mission to the dark side of the moon by any other country. So in that sense, India has been fairly successful in Chandrayaan 3. There is renewed interest in the space tech sector, in India's startups and private sector which are now open to space exploration. I think any sort of investment coming into that sector, into space tech, into further honing the entire space exploration space, and even as we speak, you know, our sun exploration mission is underway.
Absolutely.
So you've got the Aditya actually heading to L1 to actually optimize the gravity of the Earth and the Sun, where its fuel burn is going to be next to nil, almost zero, and it continues to orbit around the Earth while getting a clear view of the Sun, and that is likely to start transmitting about 4 months from now. So I think the whole space sector is very hot right now. And the timing for G20 summit culmination here in India could not have been any better.
Absolutely. The G20 culmination in just about a couple of days from now, 4th of September, 7th of September onward. It begins in the national capital. There's a lot on the agenda, but remember, as we discussed, preparations, of course, in full swing as India prepares to host leaders of the G20 nations. We will, of course, keep bringing you all those details. But with that, it's a wrap on this bulletin. Thanks for watching.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime, and probably of him personally. So he has to keep going.
Year 2, no end in sight. Streaming now.